Time report. I'm Sonal Bhutra and with me is Manglam Malu. It's a fresh new week of trade and today we are coming up with some soft cues. As far as the Nifty is concerned, we are sitting with cuts of 44 points. It has recovered a tad bit from the lows, but still the larger texture is that of the weakness in the benchmark indices. The mid-cap side of things, they continue to do well. So that index is up 0.2%. Now remember, mid-cap has been an outperformer last week as well and today as well. It's starting the week at least on a firmer note. Let's see whether that continues or not, because the big cue definitely will be the RBI policy. We'll have to see whether all of it or most of it is, seen in the market moves already or not.
Yes, it is. It's a fresh new week, but it's the same old range that we're working with. Last week was a good one as the Nifty scaled new heights. But, for all its worth, the Nifty ended just about 1% higher. And now today as well, we are seeing the market meander around that bit of a range. But the good part is that over the last couple of trading sessions, we've seen the mid-cap index do much better. So we will monitor cues as they thin out towards the end of this year itself. Let's talk about individual stocks. Let's talk about PG Electroplast. As we're winding down on the year, let's take a look at some of these stocks which are buzzing around 70% higher in the last 1 year. The company, remember, is a contract manufacturer of plastic molded components and in consumer electrode as well as printed circuit boards too. They're also a beneficiary coming in from the PLI scheme in room ACs. The stock, a big mover last year, but also today has been buzzing around. What's the business momentum of the company looking like? We do have with us Vikas Gupta, who's the executive director at the company, joining us. Vikas, always a pleasure speaking with you. You did, harp upon that 1,800 crore revenue target for this year with about 7% margins, so to say. Just wanted to know an update on that. But more importantly, in the AC business itself, which is likely to be a growth driver for you, it is now the time where people will start stocking up for summer. So what's the outlook there? The previous quarter, you crossed about 250 crores in terms of quarterly revenues. Your thoughts here?
Yeah, so good afternoon, and Manglam, and thanks for having me here again. Regarding air conditioners, as you have rightly pointed out, we are already in the middle of ramping up our production. In fact, we are just peaking out, and I think in next 1.5 to 2 months, we'll be peaking at our production levels. And we have already, as you pointed out, we have already done a revenue of around 250 crores in the first quarter. This year, we are shared a guidance that in air conditioners, we should be able to do revenue of almost around 700 to 800 crores. And we are sticking to that guidance. The kind of order book that we have with us, we are confident that we should be able to have a revenue of almost 800 crores coming from air conditioners alone.
And what is the current capacity utilization in ACs, Mr. Gupta? And at peak utilization, what kind of revenues do you see here? So
please understand, Sonal, in case of air conditioners, the business is very seasonal. If you look at the monthly capacity, currently we have undertaken a capacity expansion in our AC product category, where now currently we are sitting with a capacity of almost around 200,000 indoor units and almost 100,000 outdoor units. But that is a monthly capacity, okay? But when we look at the annualized production, we are targeting a production of almost around 700 to 800,000 of ODUs and almost 1 million IDUs in this year.
Okay, and what about the market share? At the end of the last year, it was closer to around that, just below that 4% mark. This year, with your capacity increasing, one presumes your market share will increase as well. What are you targeting?
So market share exact number is very difficult for me to give you right now, but we are targeting at least 2x or 3x growth in at least a 3x growth in our AC business. Last year, FY22, we did almost 300 crores of business. And this year, we are targeting 750 to 800 crores of business in AC. So the market share will accordingly be up.
Okay. So we'll watch out for that market share number in this year. I wanted to understand in terms of raw material costs. We are talking about raw material costs cooling off from the highs this quarter. Has it been passed on to the clients, or you will retain that and that will help in margin improvement? 7% EBITDA margin target for FY23, does it stay or does it improve?
So we are still maintaining the guidance of 7% of EBITDA margin for the current FY23. Definitely the commodity prices have softened up. But actually, to remain competitive in the market, we need to pass on that commodity revisions to our clients. And we'll be more than happy to retain some part of that with us. But somehow we need to look at the dynamics of the market and how the competitive landscape is operating. Based on that, we have to pass on the commodity benefit to the client as well.
You know, AC is one part of your business. You were also pretty bullish on the way washing machines would pan out for you. Just wanted to understand what's the share of revenue from washing machine, what it's likely to be. And while you talk about that, you alluded to competitive pressures, etc. I just wanted to understand what is your moat around this business? Primarily because, you know, for ACs, we do have a lot of AC component manufacturers. There are other listed players who do washing machines, etc. as well. So this is no, low entry barrier sort of business. The biggest entry barrier is the clients that you have in this business and the production capacity that you have. Apart from that, is there anything extra that you give to clients that keep them sticky?
So, no, please understand, when we talk about AC, definitely the competitive landscape is very tough. And we are a pretty new player in AC business. We started doing a ODM category of business only in last summer of 2022. So, and we launched our ODM category of AC business last year only. So we were sitting on a very small base, So we have a very strong, I would say, relationship going forward with all these clients, and the kind of commitment that we have made in PLI scheme also. So we are confident that we should be able to maintain that momentum in AC business. And regarding washing machine as well, we have done a decent number. Last year, we did almost around 160 crores of business in washing machine. This year, we should be able to close almost around 270 to 280 crores in washing machine. In the first half year itself only, in washing machine, we had done almost around 150 crores of revenue from washing machine alone. So coming back to the retentions of the client, it is basically the quality, cost, and delivery. These are the three buzzwords, three mantras for us to maintain our relationship and to remain to maintain a long-term relationship with the clients.
Okay, got that point. So in this is about your AC business, your washing machine segment as well. I wanted to understand your expansion plans into businesses like sanitary ware, the ceiling fan business. What kind of capex are you putting in here? What is the revenue potential here? And when does it start showing massively in your books?
So looking at ceiling fans and sanitary ware business, definitely they are very promising. They are growing. Currently, they are at a very small percentage, maybe around 10% of our overall revenue. But we are seeing a very strong momentum in that also, because there are a lot of clients who are working with us. They were earlier doing imports from China and other countries. They are also looking at localizing all those products, all those components. So we are seeing a very strong demand in that, and we are already expanded our capacity in sanitary ware, and we are added a new client also recently in our sanitary business, a large MNC marquee brand we have added in sanitary ware. So we are confident of bringing it to a level of almost around 15% to 20% of our revenue in next 2 to 3 years.
All right, that will be 15 to 20% of your revenue in the next 2 to 3 years. Final question then. This is with regards to your inventory days. It is well over 115. When does it come down? What is the normalized level that one should be working with? And secondly, on your revenue mix itself, how does your revenue mix pan out, say, 2 years from now, once you have, more contribution coming in from sanitary, where ACs will be on full blast, you have washing machine, and then you have your plastic business, which is already on. So what does the revenue mix of the company look like?
So plastic molding, which was almost around 57% of our revenue last year, will be close to less than 40% this year, as our focus is more on growing our product business. And I think in next 2 to 3 years, the product business, it will contribute almost 75 to 80% of our overall revenue. The main growth drivers will remain AC, washing machines, and televisions is also one category that we are into now. So In AC alone, we should be like, as I told you earlier, also in PLI scheme, we have committed a revenue of almost around 1,500 crores, cumulative revenue over a period of 5 years, which will translate into a revenue of almost around 3,000 crores in next 5 years. So AC alone will be contributing almost around 2,500 to 2,000 crores, and washing machine should be almost around 500 to 600 crores in coming 1.5 to 2 years. So that way, the overall product business will be almost around 80% of our revenue.
Okay. All right, Mr. Gupta, thank you so much for joining us, giving us all those details. And those are the plans with PG Electroplast in coming quarters, so to say. The stock is up around 4%, has been a big outperformer this year as well. Let's do one thing. Let's slip into a short break. On the other side, we'll put focus on DFM Foods and some